Good afternoon, everyone. This is Harshita, and I welcome you in today's webinar on anti-money laundering overview. First of all, I'm thankful. I appreciate each and every one of you who has joined today's webinar. We have received an overwhelming response. So we also had to be live on LinkedIn. And we are here in Zoom as well. So this webinar is also, we are making it live on LinkedIn. I welcome today's speaker. Personally, I'm very much, it was very inspiring, Shweta, to go through your profile personally and in LinkedIn as well. Truly, I can say I'm one of now a great fan, especially because in the past I have been reading about AML. So that's there. Welcome you all. Welcome everyone. And especially Shweta, welcome. And thank you for accepting our invitation to be a part of today's webinar as a speaker. So, participants, we shall be joining by members in due course, but to abide by the time and to be fair with all of you who have joined us, who have been waiting from past few minutes, I will start by reading a profile of our speaker, today's speaker, Ms. Shweta Gokarn, and I will be reading her full profile, and after that, I'll leave the floor to her. Just a quick update, all the questions, if you have any while during the webinar, you can post it in the Q&A window. Once the webinar is over, we shall be taking a question answer. This is also subjected that it should abide with the time. Based on the timings, we shall be taking the Q&A. So thank you, everyone. Shweta, with your permission, I will go through the profile. So Shweta, she is the founder of Shweta Gokarn & Co., a practicing company secretarial firm, and STGY Consulting, a transporter advisory firm with base in India and UAE. Is an associate member of the Institute of Company Secretaries of India and holds an MBA in finance. She is also a qualified member of the Association of Certified Anti-Money Laundering Specialists, ACA-MLS USA Global Organization dedicated to fighting financial crimes, and an associate member of the Chartered Institute for Securities and Investment, the CISI UK, a leading global body of financial services professionals. She fostered her own company secretarial practice in 2012. Over the last decade of her independent practice, she has advised 400 plus corporate clientele in India, as well as from the USA, UAE, UK, Singapore, Australia, Switzerland, and Norway, operating across diverse industry segments such as aviation, animation, media, IT, fintech, shipping, banking, manufacturing, food and beverages, agricultural, branding, infrastructure, education, in their corporate secretarial compliance and governance matters. She specializes in corporate laws, securities law, foreign exchange laws, anti-money laundering laws, and Foreign Contribution Regulation Act. Shweta has actively contributed to several prominent startups, leveraging her expertise to play a pivot role in successfully raising funds aggregated over 20 billion rupees. Additionally, she has been instrumental in establishing robust secretarial compliance and corporate governance framework for a diverse area of corporate entities, ranging from innovative startups to multinational corporates and listed companies. In 2023, Shweta has been appointed on the Expert Committee of Startup Forum of Bombay Chamber of Commerce, BCCI, the oldest industry association in India, established in 1836. She possesses extensive experience with global firms and best practices acquired through her associations with Pivot Management Consulting, India and Cyprus. This consulting firm specializes in post-trade securities service and the capital market infrastructure space. Additionally, she plays a crucial role as a part of a core team responsible for developing the pioneering handbook for foreign portfolio investors, a first of its kind initiative launched by BSC Limited. Her exposure in the domain of corporate governance also led her to an opportunity to be the independent director on the board of prominent corporate entities in India, Manipal Technologies Limited, a pioneer leader in the banking card manufacturing industry. Beyond her professional achievements, Shweta actively contributes to the community. She has been the youngest panel member of the advisory cell of expert for the Maharashtra Center of Entrepreneurship Development an initiative by the state government of Maharashtra, India, guided over 1,500 aspiring entrepreneurs across Maharashtra through MCED platforms. She's also part of a core committee for the Global Chamber of Saraswat Entrepreneurs. Shweta also enjoy monitoring young and aspiring corporate professionals and students. Guys, participants, I just request a virtual applause. It has been with such a area of dynamic profile. I think we are truly lucky to have Shweta among all of us. Shweta, now the floor is over to you. Thank you so much.
Thank you, Harshita, for the elaborate introduction. First of all, thank you,
because I want part, to other people to join in. Let us be fair to all.
Sure. Good evening, everyone. At the outset, I would like to thank NISM for this opportunity, for calling me to talk on a subject which is of interest to a lot of people. Today, I saw that, I was informed by the NISM team that there is almost around 2,000 plus participants who have shown interest in today's webinar. That shows how robust the subject is. And if you see in every day in newspaper, the moment you open a newspaper these days, there is some or the other news that is related to PMLA, the Prevention of Money Laundering Act in India. Considering the high profile nature of the cases, for example, if you see the news is generally around that the enforcement directorate has taken search of someone's premises or has summoned someone or someone has been accused of the alleged allegations or offenses around the PMLA. Yeah, so exactly, considering all these high profile nature of the cases, the subject has become of a lot of interest and is also gaining a lot of momentum in the recent times. To be very frank, the time that is allotted, which is just 1 hour to address a vast subject like prevention of money laundering or the concepts given around money laundering, is very limited. And it's really challenging for me to cover everything fully and to give justice to the subject, to ensure that I cover everything and anything that is possible to be shared under this particular subject. Especially when the audience is such a diverse audience that we have today. Therefore, I decided to have a focus on fundamental concepts around the AML segment, to provide a solid introduction for everyone to begin this series of webinars with. So let me share my presentation. Is my screen visible, Harshita?
Yes, it's visible.
Okay, sure. As I mentioned, the moment we open newspapers these days, there are multiple news around this particular subject, and that's what makes this subject absolutely interesting. So let's begin our journey of next 1 hour when we are discussing the money laundering, how it happens, what is the process involved, what is the kind of offense that it is, what are the repercussions, what is a global overview around it, and what India has done and what FATF does, and all these things around this whole concept. So let's start with what a money laundering is. Money laundering involves taking criminal proceedings and disguising their illegal sources in order to use the funds to perform legal or any illegal activities. Simply put, money laundering is the process of making dirty money look clean. When a criminal activity generates substantial profits, that's when the individual or the association or the group of people who are involved in such kind of activities, they need to find the way to use the funds without drawing attention to the underlying activity or the persons who are involved in such generation of illegal profits, or as we call as proceeds of crime. Generally, criminals across the globe achieve this goal by using multiple methods. There have been some traditional methods, but as you see, the technology is evolving. there are so many innovative ways in which criminals are trying to launder money, create multiple layers, and try to introduce this money into the legal financial systems. The criminal activities that lead to money laundering can include illegal arms sales, narcotics trafficking, smuggling, and other activities related to organized crime. Also, if you see Companies Act, Section 447, which relates to frauds, is also connected and covered under the scope of PMLA. Along with that, SEBI Act, Section 12A and Section 24, which also talks about insider trading, also comes under the purview of PMLA because these acts are also covered under the scheduled offenses that are listed in the schedules that become part of the Prevention of Money Laundering Act in India. What I have displayed on the screen is a definition that has been defined by United Nations 2000 Convention, which was, and if you specifically see the points that I have highlighted, speak about something and speak about a particular aspect of knowing that particular proceeds are derived from. So I'll just read for the benefit of all. The transfer of the property or the conversion of the property is done knowingly that it is derived from a criminal offense for the purpose of concealing or disguising its illicit origins, or of assisting any person who is involved in commission of such crime to evade the legal consequences of his or her actions. Majority times, if you see why I have specifically highlighted the fact that apart from doing or committing any criminal activity that is going to generate such illegal proceeds, if there is someone else who is also involved in the process, who is going to help the money launderer in the process, knowingly will also be convicted or will also be liable to prosecution or action against such prevention of money laundering laws. You will note that the definition of money laundering provided by UN Convention highlights the important aspect of knowledge, having a knowledge of this thing. Many jurisdictions overall worldwide use the legal principle of willful blindness or purposeful indifference or deliberate avoidance of knowledge to ensure or to find out or to cause to prove the knowledge that someone had this knowledge, even though after having the knowledge so and so person was involved in the activity of money laundering. Basically, such instances wherein person was aware of such activity and still involved himself or herself in such activity will be considered as good as or equivalent of having knowledge and still proceeding in the illegal activities. Talking of the definition, I would also like to highlight one particular aspect of proceedings or proceeds of crime that have been defined in Prevention of Money Laundering Act, PMLA 2002, that is the act enacted in India. The section 2, subsection 1 to 1U of the PMLA Act defines that what exactly means proceeds of crimes. Any property derived or obtained directly or indirectly by any person as a result of criminal activity that is with respect to scheduled offenses that have been defined in the Act will be considered as proceed of crime. It is necessary to understand that only PMLA Act will only come in place in cases wherein there are proceeds of crime involved. There is a possibility that there are certain scheduled offenses. For example, attempt to murder is a scheduled offense, but if that particular offense, which is a scheduled offense, has happened without any intention of any underlying money or monetary transaction, in that case, the ED, I mean the Enforcement Directorate, cannot take action against such person because that will not covered that activity will not get covered under the PMLA Act. So proceeds of crime is something that is very important to remember when we are considering whether this particular case or this particular instance will fall under the ambit of PMLA Act. The next point is understanding the three stages of money laundering. As you can see on the screen, there are three stages of money laundering. The very first stage is placement, the second one is layering, and the third one is integration. I'm sure most of you must have seen the web series which was released a few years back on a OTT platform of Netflix, which was named as Narcos, which was based on a real life story of a drug mafia, Pablo Escobar. That story tells us about a lot about these three stages of money laundering. So, what really happens in these three stages? Let's have a look. The first stage of money laundering is placement. This is where the illegally obtained money is first involved or introduced into the financial system. It could be a simple transaction of depositing the cash that has been generated from the criminal activity into the bank account. That is the first stage. Worldwide, it is known that during this stage, the money launderers are most vulnerable to being caught. So, many times when the AML policies are being defined, or the procedures that are being defined, or even in terms of giving proper training to the employees who are facing the end clients or customers, it is very necessary if they are well trained, if they are well aware about the practices that are being followed by the money launderers, such kind of activities or such kind of transactions could be traced at the very beginning of the first step, that is of placement. The second stage is of layering. This is the primary purpose of layering stage is to ensure to separate proceeds of crime from its source of like original source. In this stage, money is moved around. There are a lot of transactions and layers of multiple transactions that are placed and conducted to make it difficult for the enforcement agencies or the regulators or the reporting entities for that matter to trace the origin of the source of those funds. This could involve transferring funds between different accounts, different countries, inter-jurisdictions, or there could be transfer of funds from one business to another business, showing it as if this is some legitimate business transaction that is happening. Once the cash is inserted in the financial systems, then the criminals try to engage multiple complex transactions to ensure that enough number of layers are covered so that nobody is able to track down or trace down the original sources of these funds. Layering at times can also include investments in legitimate businesses. For example, once the money is introduced into the bank system, there is a possibility with the help of that money which is in the bank account, criminal may want to purchase a property or may want to invest into another business and then mix the funds between those two activities. Then comes the next stage, which is integration. Many times it is very difficult to identify which stage of money laundering it is because the second and third stage could also be combined together. The third stage that we talk about is integration. Here, the laundered money is reintroduced into the economy in a way that as if it looks like a legitimate business transaction. So, as I mentioned in the earlier stage, that this means that the criminal or the money launderer will try to purchase maybe some high value assets, which could be purchase of real estate or some luxury hotels or luxury items, or simply spending it as if it's derived out of some legitimate income. Most of the times, once money reaches this third stage of integration, it becomes absolutely difficult at times to differentiate because just imagine a case wherein this money has been utilized to purchase a restaurant, which is very cash-driven business, and then there is a legitimate business that is happening, but at the same time, it is also coming up wherein mixing of the criminal funds are also happening there, and that way it becomes very difficult to differentiate which is a legally earned money and which is a criminal proceeding that has been mixed into these legitimate funds. So these are generally the three stages of money laundering. This is a very fundamental concept that anyone who wants to understand what a money laundering is all about is necessary to know or aware of. Next, I would like to give you a global overview of where it all started. So, Financial Task Action Task Force, I'm sure you must have heard about FATF. FATF is a global agency. It's an intergovernmental body that sets international standards that aim to prevent activities that are related to money laundering as well as terrorist financing. Um, G7 nations launched FATF as its annual economic summit in Paris in 1989 with an special intent towards a collaborative or a cooperative and coordinated effort against money laundering. I think it was after the event of 9/11 when the focus of FATF was also moved towards specific actions of the terrorist financing. And that's where, since then, the main object of Financial Action Task Force is around the measures, countermeasures that are necessary to be taken against the money laundering and financing of terrorism related activities. If you see why these two concepts are related, I mean, as in we say money laundering and terrorist financing, both money launderers as well as terrorists try to use the similar methods or techniques to move their funds from one end to another end in such a way so that it avoids any kind of reporting requirement or it avoids any kind of detection. Many times, underlying banking, underground banking, or fund transfer techniques like Hawala are used in such cases. While the funds destined or generated from money laundering activities are always derived from criminal activities, because as we also have seen that definition of criminal proceedings, right? Proceeds of crime. So the activity or the funds that are generated from money laundering will always be from criminal proceedings, whereas funds that are generated for the purpose of terrorist financing need not be only from legal or legitimate activities. It could be from absolutely both the sides. It could be from the criminal activities as well as from the legal activities. Because the intention, like people, whoever want to fund the terrorist activities can always be from the both the sides. There are certain recommendations that FATF has given over the period. These are known as FATF's 40 recommendations. I'm going to talk about these specific recommendations. Not all recommendations will be able to be covered in today's session, but at least my plan is to highlight a few of them. So while talking about FATF, as I mentioned, the objective of FATF is to set international standards and promote effective implementation of legal and regulatory and operational measures for combating money laundering, terrorist financing, and other related threats to the integrity of the international financial system. So how does it fulfill its objectives? For that, Financial Action Task Force has to generally, I mean, what they indulge in is spreading AML related awareness worldwide, globally. That is the first intention or the first objective that they do. The next point is monitoring the implementation of its recommendations, especially amongst the member countries. You must have heard about the mutual evaluation process that generally is conducted by FATF on specific intervals of their member countries, mutual evaluation. And the next point is reviewing ongoing money laundering trends. Like as you can see, there are so many new trends in the money laundering and these related activities, especially thanks to the advancements into the technology. So FATF needs to constantly keep reviewing the new trends and also come up with the suggestive countermeasures that are necessary to fight or combat with such new techniques of money laundering or terrorist financing. As a policy making body, the FATF works to generate necessary political will. That is very important. If you have seen, Many times it depends upon jurisdictions to jurisdictions how much and how much they want to implement, and what is a political will in that particular jurisdiction to ensure that they have all the procedures and the legislative frameworks in place to combat and fight against money laundering and terrorist financing. So it is also the role of FATF to ensure that necessary political will is brought in at national and international level to ensure that these measures are taken in place. Talking about FATF's 40 specific recommendations, the key element of FATF's effort is to provide a detailed list of its recommendations. These recommendations have become towards blueprint when it comes to implementation of AML and CFT controls. Even International Monetary Fund as well as World Bank has recognized FATF's recommendations as international standards for combating money laundering and terrorist financing. So let me give you a brief idea of these recommendations. The very first point that it all starts with is risk assessment and applying a risk-based approach. It starts from the top that any country is expected to undertake a risk assessment. What are the risks associated with that particular jurisdiction, which pose threats to its financial systems, and which are the specific vulnerable areas that are more prone to such kind of activities. That's something that needs to happen first at a country level. Then also all the implementing agencies like your intermediaries or your reporting entities also at their level need to ensure that a risk assessment is done. And everywhere we have to apply a risk-based approach. Sorry. The next point is having AML and CFT policies. I mean, having just discussed what it needs to be done is not enough. All the entities, and even at national level, all these reporting entities and even the nations need to have their AML policies in well-defined manner available and readily written, including all the internal processes, policies, and procedures that should be in place to implement the best foot forward when it comes to their measures against money laundering and terrorist financing. The second most important point is also criminalization of money laundering offense and confiscation of the proceeds. One of the strongest recommendation of FATF to its member countries is to ensure that such country provides for a legislative framework or a law that ensures to criminalize the money laundering offense. And it also provides sufficient authority to its implementing agencies or adjudicating authorities, wherein such proceeds of crimes or money which has been laundered in the system gets confiscated. All the proceeds are confiscated and should not remain in the hands of the criminals or the money launderers for further usage. I think that's one of the reasons why in 2002, even adhering to these recommendations, when India became member of FATF, later on, even we had a PMLA Act coming picture, and since 2002, the Act came in place, and 2005, the government also came up with the specific rules when it comes to maintenance of records under PMLA. The next point is terrorist financing and financing of proliferation, sanctions. You guys must have heard about sanctions. So there are different types of sanctions. There could be sanctioned countries, sanctioned people, sanctioned jurisdictions, sanctioned organizations. Sanction basically means that such kind of jurisdictions or entities are not necessarily complying or adhering to the best practices when it comes to the AML laws, and are very much exposed and open to the risk of money laundering, terrorist financing. There are a lot of organizations, including your UN or EU generally, or even the regulatory bodies or different governmental bodies who come up with the sanction lists every now and then. Generally, the reporting entities need to have an updated list of these sanctions so that whenever they are doing any customer due diligence or background checking of any customer or entity, that time they have access to these updated sanctions, because sanction list can get updated at a very frequent interval. At times, it could also be on daily basis. There could be some name that might get updated. So there is a need to have a tap on what is happening. The next point is inclusion of non-financial institutions. The specific denotation that is used is designated non-financial businesses and professions. If you have seen, especially in the last year, the kind of amendments that were introduced in PMLA Act, professionals like us, like professionals like chartered accountants, company secretaries, cost accountants, in practice, were also finally brought under the purview of Prevention of Money Laundering Act. There was a lot of buzz around, when this particular amendment came in place, and there were a lot of ifs and buts, what if, and there was no much clarity in terms of what exactly will be covered. Then, of course, there were further clarifications issued, and now I think the things are quite clear. In next couple of slides, I'm also going to cover what it means by the reporting entities who are covered, and what are the specific transactions which get covered when it comes to these reporting entities or specific persons. So that is about inclusion of non-financial institutions in the purview of PMLA. Next, one of the highlight is customer due diligence. It is expected by the reporting entities, from the reporting entities, that any new customer is onboarded only after a thorough due diligence has happened. And especially in certain cases where there is a high risk customer, a person who is maybe from high risk jurisdictions, or person who is politically connected, like as we call as politically exposed person. PEP is the term that is used in the AML domain. So in such cases, there are enhanced due diligence measures that are required to be taken to ensure that we also verify what are the sources of funds, what is the income source, and from where the wealth is generated, and what is the type of transactions that are being introduced to the system, all of that. So there is a need to do enhanced due diligence as well. Record keeping, of course, it is mandated, and one of the strong recommendations by FATF is to have a strong record keeping system. Next point is reporting of suspicious transactions. Many jurisdictions have a unit similar to what we call in India is Financial Intelligence Unit, where reporting all these suspicious transactions is required to happen on regular intervals. The act or the regulations or the guidelines which are issued by the jurisdiction specific or domain specific regulators define these timelines when the reporting needs to be done for such kind of transactions. Transparency and identity of beneficial ownership of legal person. Many times when there is a business entity which is or a private limited company or an LLP which is becoming a client, at that time it is absolutely necessary for the reporting entity to check who is the beneficial owner. There are certain thresholds which have been specified under the international standards. Those are 10%, considering 10% of the ownership, 10% of the controlling stake, or 10% of the voting rights. Earlier, in our case in India, the threshold was around 25%, but last year the threshold was brought down from 25% to 10%. FATF's recommendation is also to ensure that there is enough power and responsibility given to the competent authorities to ensure the enforcement of PMLA laws. And the last one is, of course, international cooperation. PMLA, the kind of act and the kind of activities that it covers, it is absolutely necessary for intergovernments or governments of different countries to combine or to basically cooperate between themselves when it comes to transfer of or sharing of some information that might be needed, or at times it could be also the transfer of or extradition of one person who could be potential terrorist and things like that. So international cooperation is absolutely recommended and is one of the strong recommendation of FATF. Moving on, To the next slide. So what exactly does FATF require the member countries to do? It is expected that countries identify assets and understand the money laundering, terrorist financing risks for their country. Depending upon the high risk nature or the low risk nature, the measures that are required to be taken could be changed. For example, if there is a high risk involved, then enhanced measures to adequately address the ML and CFT are required. In case of lower risk, there is a possibility that the country may take simplified measures versus what has been recommended in the FATF. This is just to give you a quick idea. When recently India as a nation conducted its national money laundering risk assessment, these were the specific sectors, and this is how India has identified the risks that are involved in these sectors. If you can see, real estate has been highlighted as highest vulnerable sector when it comes to money laundering related activities. Banking has medium and high risk, and there are such other options. Casino, of course, low, because in India, we don't really allow such kind of. Moving on to the next slide. As I mentioned about the mutual evaluation in one of the previous slides, very recently, literally in the last month, FATF completed its review of almost 131 countries and jurisdictions, out of which publicly identified 106 countries. And of these 106 countries, 82 have been made, out of these 106 countries, 82 jurisdictions have made necessary reforms to address their AML and CFT weaknesses and have been removed from the process. There is a list that gets published whenever there is such evaluation completed. In the recent list that was published literally last week in February, on February 23, 2024, two new countries have been added in the grey list, Kenya and Namibia, versus the previous list of grey listed countries. One of the country and four countries have been removed, of which one was United Arab Emirates. So now we can come to what Prevention of Money Laundering Act is in India. I have just briefed the highlights of the act because the entire act itself can take maybe at least 3 to 4 hours different session, and there are so many case laws that have been happening and practically that can be discussed under PMLA Act. But anyways, I mean, sticking to the time that we have today and only specific points that I can cover today. So PMLA introduced with an intention to prevent money laundering and to provide for confiscation of the property derived from or involved in money laundering activities. This is, as I mentioned, this is one of the primary recommendations of FATF. Money laundering is a criminal offense with minimum imprisonment of 3 years and maximum 7 to 10 years. Along with that, the activity, I mean, the punishment also involves confiscation of all the proceeds which are involved in the activity. Action under PMLA is initiated on committing a scheduled offense under any 29 acts mentioned in schedules of PMLA. So there are 3 different schedules that I have mentioned in the PMLA. And if there is any crime through which this money is, I mean, the proceeds of crime are being generated out of the scheduled offenses, then that becomes, or that comes under the purview of PMLA. Enforcement Director is the investigating agency. You must have seen multiple newses where ED is constantly in news when it comes to seizing of assets or confiscation of assets, or calling someone for summons, or somebody is being accused or accused of alleged PMLA offenses. So Enforcement Director is the investigation agency. Under PMLA, this is very important. Under PMLA, the burden of proof is on the accused, which is affirmed by Supreme Court in couple of cases. unlike other criminal laws wherein the burden of proof is generally on the authorities or the adjudicating officer or the person who is, for example, wherein, for example, a police has lodged a complaint. In that case, the burden of proof is on police to prove that, such and such act has happened. But in case of PMLA, it is important to note that the burden of proof is on the accused, which is confirmed. It This is what makes it absolutely draconian, because many times you have to be extremely cautious, and you need to have enough supports and documents and evidences to prove in case if you have really not been involved in such kind of act. Otherwise, it's going to be a bit difficult. Scope of PMLA is very wide as to cover even the connected persons. Yeah, this is true. As mentioned, even though a particular criminal has done some criminal activity of which he has generated some proceeds, but if a consultant like a chartered accountant in practice or a company secretary in practice is going to help that criminal to basically, in the next two stages of the money laundering, which is layering and integration, then in such cases, indirectly, this practicing professional also becomes part of the offense, and that's when even that person can be accused of offense under PMLA and will be liable for action. There are various reporting requirements from financial institutions and intermediaries, of course. The PMLA Act provides for reporting of suspicious transactions. Cash transactions are required to be reported. So if you see industry-specific regulators, for example, SEBI, in February 2023, SEBI came up with a detailed master circular, which was basically a guideline on AML and CFT measures and what procedures and reporting requirements are required to be done by the reporting entities which are registered under SEBI, which are SEBI registered intermediaries. So similar to that, even RBI has come up with such kind of AML guidelines for banking and financial institutions. So that way, there are a lot of reporting requirements that are in place and that need to be adhered to. Prevention of Money Laundering Act, what constitutes as offense? Similar to what we have seen as what constitutes as proceeds of crime, it is necessary to understand what constitutes as offense. Person shall be guilty of money laundering if such person is found to have directly or indirectly attempted to indulge or knowingly assisted in one or more of the following processes or activities connected with proceeds of crime: concealment or possession or acquisition or use or projecting it as untamed property or claiming it as untamed property. So any of these activities could be connected or could be connected as offenses under the PMLA Act, and that's where people like practicing professionals need to be absolutely careful while dealing with these kind of transactions on behalf of their clients. Processes or activities concerned with proceeds of crime is a continuing activity. This is another important factor which gets asked many times, that whether something that has happened in the past. So, for example, if there was some activity, criminal activity that happened in the past because of which lots of funds were generated, today, currently, I may not be indulging into the same criminal activity, but I still have proceeds of those crime, and I'm enjoying proceeds of those crime, that money, by maybe I have invested in assets or houses or whatever. So in such case, do I still be accused under PMLA Act? The answer is yes, because very well defined provision. It says that process or activity concerned with the process of crime is a continuing activity. So as long as the criminal or any person who is connected with that proceed of crime is enjoying it on continuous basis, that will be considered as an offense. Proceeds of crimes means any property derived by any person. I have already covered this, so I don't want to repeat it. But these are the three schedules under which all these specific scheduled offenses are covered under PMLA. Now we come to the next point, which is the concept around reporting entities. Initially, when PMLA Act was introduced, only three types of entities were covered under the definition of reporting entity. One, of course, was banking entity of its obvious nature of being exposed to money laundering. So all types of banks are covered as a reporting entity. The next was financial institutions. That could be chit fund, insurance company, housing finance, including even Indian Post is also covered in the definition of financial institutions, which are considered to be the reporting agencies, reporting entities. Then intermediaries registered under Section 12 of SEBI Act. So there are multiple intermediaries that or entities that get registered under SEBI Act that are required to be considered as reporting entities. One important point here is if there are branches of any stock exchanges or their subsidiaries or clearing corporations which are situated abroad, in that case, even those will come under the purview of reporting entities of Indian PMLA. And then there came the provision of including non-financial business professions into the purview of reporting entities. So in last few years, there were a lot of amendments which kept on adding these additional layers of designated non-financial business professions under the purview of PMLA. One is, of course, real estate agent. India has anyways identified real estate as highly vulnerable domain when it comes to money laundering. So real estate agents are required to become the reporting entities. Dealers in precious metals, stones, high value goods, generally all these jewelers and everyone will come under this category. A person who is carrying on an activity for playing games. So generally casinos or places like this will be considered as reporting entities. Person carrying on such other activities as central government notifies from time to time. I have on the next slide detailed those kind of activities. Generally, under this category, a lot of practicing professionals came under the purview of PMLA. And very recently, again in 2013, when one of the amendment notification came, that's when the Indian PMLA Act has now also covered people or the entities which are dealing with virtual digital assets as well as crypto. This is one of the recommendation that is evolved from the original FATF's recommendations because of the nature of crime and the nature of technological advances due to which new and more innovative kind of activities are coming under this are being utilized by the money launderers, and that's when this came in picture. Transactions covered by relevant persons. So, initially when this requirement came in where the practicing professionals were being subjected to become the reporting entities, there was a lot of chaos and there was no clarity in terms of whether all practicing professionals will be covered under this particular reporting requirements entities. But then there was clarification and it specifically mentioned that only those practicing professionals who are involved in financial activities which are being taken by them on behalf of their client, which are of following couple of types of nature, then only in that case, those practicing professionals fall under the definition of related party. And then they are required to register themselves on FIU and follow all the rest of the reporting requirement compliances. The transactions that have been specified are buying and selling of immovable property, managing of client money, securities or managing securities or other assets, management of bank savings or securities accounts, organization of contributions for creation, operation, or management of companies, and of course, buying and selling of business entities. So any practicing professional who indulges into these kind of activities on behalf of the client needs to adhere to the requirements of reporting entities. Now, specifically talking of notification that came on 9th May 2023, persons carrying following activities. So the 9th May notification added further, layers into the definition of reporting entities. And in this definition, it is not just the chartered accountants or the professionals, I would say, who are covered, but everyone. It could be any person or any agent, for example, who is acting as a formation agent of companies or who is acting on behalf of the company, or acting as a director, or providing another person to act as a director to serve on a board of the directors of the company could also be covered under the reporting entities. So this is something which completely widened the scope of reporting entities. And going forward, all these people who are not necessarily practicing professionals, but who are indulging into these kind of activities need to adhere to these requirements. Then I would like to highlight some key amendments in the PMLA Act in last 1 year. First, we have already discussed elaborately, adding or practicing professional. The second was widening the definition of non-profit organizations. Earlier, the definition of non-profit organization was limited, but now with this, I think May 2023's amendment, a proper definition of non-profit organization was introduced. Now even Section 8 companies, trusts which are registered or not unregistered, everything gets covered under the non-profit organization. All the market intermediaries who are dealing with non-profit organizations are required to ensure that those entities are mandatorily registered on Darpan portal, and that's a mandatory requirement. The next point that also covered, I already have mentioned that the beneficial owners, for considering the beneficial ownership, the limits has been amended from earlier 25% to 10% when this came in place. SEBI in its guidelines also specifically mentioned that if earlier banks or these kind of entities have taken declarations on PO for 25%. Now they need to go back and check if there are any such the BOs who hold 10% or more. In that case, they will have to take the fresh declarations and disclosures. Then in this case, there was also introduction of the politically exposed persons, which was introduced. Earlier, that was not the case. Why was it really required? So, I mean, everyone understands that the kind of access that politically exposed people have and the kind of influence that they can make on a lot of things, it is expected that they might be too vulnerable to be exposed to the threats of money laundering or terrorist financing, and that's why PEPs are now also covered under the purview of PMLA Act. So is it necessary that no business should be conducted with PEP? That's not true. Business, of course, can be conducted with PEPs, but only requirement is there has to be enhanced due diligence that the reporting entity needs to do. And also there has to be continuous monitoring on the transactions and the type of varieties of transactions that are being conducted in the PEPs accounts or related activities that need to be constantly checked. The next point was additional focus on due diligence and documentation. They have introduced some more specific documentation requirements as per the new PMLA, amended PMLA requirements. And now, of course, as mentioned earlier, they have also pulled cryptocurrency and virtual digital assets into the ambit of PMLA, which was much needed, especially after a lot of crypto exchanges came in place. As mentioned earlier, there are a lot of common obligations for the reporting entities. So whether it is a SEBI registered entity or whether a practicing professional or whether any bank or a financial institution, as a reporting entity, there are common obligations. So though every regulator has come with their own set of AML guidelines and reporting requirements, I tried to put everything together and I have come up with a common list of obligations that are applicable across all types of reporting entities. So let's have a look at it. The foremost is formulation of relevant policies. It is mandated that all the reporting entities should have certain policies which are written, which are communicated well to all the employees of the company. It includes first policy, which relates to policy of acceptance of customers or clients. Then procedures on identifying the clients, risk management policy. Of course, the AML procedures are also required to be written and documented properly. Then the transaction monitoring policy, which kind of transactions are required to be reported. So there has to be a policy and procedure on how the transaction, in case if there is any suspicious transaction, how that needs to be reported, what is the right channel, everything needs to be defined in these policies. So the first and foremost point is about formulation of relevant policies. Next point is conduct of customer due diligence. This is mandated again for all types of market intermediaries as well as all types of reporting entities, that any customer that is onboarded needs to be thoroughly his or her background or that entity's background needs to be thoroughly checked. In case of business entity, you need to identify who is the beneficial owner. If there are multiple layers of this structure, then you have to ensure that you ask for those additional documentations and information pertaining to those layers of entities, maybe the holding company or associate company that comes into the picture. So a thorough due diligence is required to be done to verify the identity of the customer. And basis that, you also need to assess the risk type of risk profiling of that particular customer. Some customers could be high risk profile customers, especially the politically exposed people, or if there is a client who is from high risk jurisdiction. In that case, the enhanced due diligence will have to be taken care of, and of course that client will be identified as high risk. So in such cases, additional monitoring reports or additional monitoring processes are in place in case of such high risk clients. The next point is maintaining the records of the customers, the customer transactions, and keep them up to date. As per the guidelines in many of these master circulars which are issued by SEBI or RBI, generally the standard requirement, again, that trickles down from the FATF's recommendation, is minimum 5 years records are required to be maintained. So, for example, if a customer is onboarded, then minimum 5 years records from the date of his engagement or from the date of the last transaction that happened with him, in case if the account is closed or so and so. So 5 years tenure has been defined. What kind of details are required to be mentioned? So of course, if it is client onboarding, then all your KYC related documents. If there are any additional documents that you have taken in terms of declaration about the sources of wealth and everything needs to be maintained, because not just the authorities, but even in case if there is any suspicious transaction, your own principal officer or your own designated director will need access to this information that should be updated and available every now and then. The KYC is not just one-time process, but on regular intervals, you need to get in touch with the client to take the updated KYC. That is a mandatory requirement. The next point is monitor and report suspicious transactions to the Financial Intelligence Unit India. FIU has created this FinNet 2 portal on which all these reports are required to be posted. The process generally involves is, if there is any such suspicious transaction, first the principal officer of that reporting entity needs to be notified, and principal officer as well as a designated director, and only after evaluating the entire details about that transaction and whether it really is a suspicious transaction or it was a false suspicion or whatever. So after evaluating that, within 7 days of the conclusion of the evaluation, the suspicious transaction report is required to be posted or to be filed with FinNet 2 portal with FIU. One very important aspect that needs to be kept in mind, and this also comes as a part of the training to the employees, is whenever there is any suspicious transaction that is about to happen or happening, and if the ground level employee is going to report it to the principal officer, the customer whose account is being reviewed should not be aware of it. So it's called as a tipping off kind of tipping off is the word. So such customers should not be tipped off by any employee or any internal person so that that person, because if there is a potential criminal, or there is a potential money launderer, then if they come to know about this suspicion, then they might take necessary actions and flew away. So that's why it is necessary that no such tipping off happens when internally this is being assessed. Then the next requirement or the common obligation for reporting entities is appointment of principal officers and designated employees. Principal officers become the first point of reference for anything to do with your money laundering related activities or suspicious transactions related activities, or your AML policies, anything and everything to do with your ML implementation. Principal officer is the one person to go to. And in addition to that, PMLA also suggests that you need to have a designated director who is from the ranking of either managing director or executive director of the company, but that is a necessity. One thing that needs to be noted is, in case if a reporting entity is guilty of non-reporting, for example, of any particular event or of any particular suspicious transaction, so in that case, there is a chance and there is, of course, a possibility that the regulators will levy certain penalties. And in such cases, even the designated director is exposed to the liability on personal level of such liabilities. The next point is establish and maintain internal controls and procedures to prevent money laundering. Of course, there has to be first line of defense, second line of defense. The reporting entities need to ensure that there are proper internal controls. If you have glanced through the SEBI's master circular on ML guidelines, it specifies that the internal audit function should also cover the scope under the PMLA, whether reporting entities are complying with these internal requirements, whether they have proper policies in place, procedures in place. So it's a requirement. The further common obligations for the reporting entities are providing ongoing training to employees to ensure that compliances with AML regulations. Training has to be ongoing because unless the employees, and as I said many times, if we take a simple example of bank, the employee of the bank who is sitting at retail branch banking operations is someone who needs to understand the importance of reporting a suspicious transaction if there is anything that is happening. Because if someone is coming and depositing 40,000 rupees every day, it is definitely not coming under the threshold of 50,000, that is the limit set, right? So in such cases, if the person is sitting there, identifies that there is some suspicious activity and why somebody is coming and depositing, unless that person is aware of such requirement, will not be able to do the necessary reporting. That's why there has to be ongoing reporting that keeps happening. Cooperate with regulatory authorities and law enforcement agencies. There has to be, I mean, if asked for information, the principal officer as well as the internal records of the company's reporting entity should be available. Conduct regular audits and reviews of ML compliance measures. Of course, I already mentioned that at times your internal audit should also cover the scope under PMLA and the guidelines, AML guidelines that are applicable to your entity. Stay updated and for any changes in AML, of course, that goes without saying. Not just PMLA, but even worldwide, one needs to understand what are the new trends, because by the time maybe the law gets implemented or the law gets amended, there could be some things or the new trends which create a lot of threat and pose a lot of threat on the AML measures of the company. So that's when the principal officers, compliance officers need to be extra vigilant and should be updated in terms of the new trends. And this is my last slide. I would like to just give you a brief idea of what are the recent trends in the AML segment. Several new trends and challenges have emerged in the field of anti-money laundering law. So let's start. The first poses is technological advancements. The rise of technologies such as artificial intelligence or machine learning and blockchain has both facilitated the money laundering activities as well as these kind of technologies have offered new tools for the ML officers. or efforts. Criminals increasingly exploit digital currencies and online platforms to elicit financial transactions, while AML professionals are using advanced analytics to detect and prevent money laundering. So, this is one of the new trends. Next is also the cross-border. I won't call it a completely new trend, but in the recent report, it was also covered. That's why I just thought of adding it here. Globalization has led to an increase in the cross-border transactions, making it more challenging uh, to track the movement of funds across various jurisdictions. Criminal organizations exploit difference in regulatory regimes and gaps in international cooperations to launder money through complex web or network of accounts and entities to multiple countries. The next point is, of course, everyone is aware of the virtual assets and cryptocurrencies. These digital currencies offer anonymity and decentralization, making it absolutely difficult to trace the sources and destination of the funds. Regulators are grappling with how to effectively regulate and monitor the virtual assets service providers while balancing innovation and security concerns. The next point is regulatory evolution. AML regulations continue to evolve in response to emerging threats and vulnerabilities. Regulatory authorities are increasingly focused to enhance transparency, improving data sharing and cooperation among financial institutions and law enforcement agencies, and imposing stricter penalties for non-compliances. Compliances with evolving regulatory requirements pose a significant challenge for reporting entities, which is absolutely true because the way technology is advancing, it is becoming very difficult to keep track of things. The next one is emergence of new laundering techniques. I mean, there have been traditional ways in which have already been identified by the regulatory authorities how the money used to get laundered, by the traditional techniques. But now, of course, the criminals are advancing their ways and coming up with absolutely innovative techniques when it comes to their methods of laundering money. They're constantly adopting new techniques to evade the detection. New methods generally include trade-based money laundering, where illicit funds are concealed through legitimate trade transactions, and the use of shell companies and nominee directors to, of course, to avoid the detection of the beneficial ownership of the assets. And the last one is cybercrime and data security. The increasing digitization of financial services has led to a rise in cybercrime and data breaches. Criminals exploit vulnerabilities in the cybersecurity defenses to compromise financial institutions and launder money through online channels. It is genuinely becoming very difficult for ML professionals to keep up again to all these techniques and to ensure that we are still ensuring that companies or the entities and the financial systems are secured away from these kind of new trends. Addressing these trends and challenges from my point of view requires a extremely concrete effort from regulatory authorities as well, financial institutions, as well as the technology providers. Law enforcement agencies also need to develop innovative solutions because the way criminals are getting innovative, equivalently, I think even the regulators and the law enforcement agencies also need to become equally innovative when it comes to the combating measures. Thank you. That's where I would like to conclude my session.
Thank you so much, Shweta. That was indeed a very informative session. And I have been receiving a lot of applause for the PPT actually here in Zoom and in LinkedIn as well. So if time permits, we can take few questions for 10-15 minutes.
Sure.
So I will ask few questions who have been posted by the participants on the Q&A window.
Sure.
I'll go with the first question. Is possession of unaccounted money considered as proceeds of crime?
Not every time, because I think activities, for example, like if somebody is evading tax, or if there are any cash rich businesses like restaurants and something, so owners of such kind of businesses might have a lot of cash. That doesn't make them criminals under PMLA. It's only the proceeds of crime from the scheduled offenses is what will be considered or will attract the provisions of PMLA. I
Okay.
think I have answered the question. Yeah.
Thank you. Moving on to another question. Is property that is derived indirectly or through further transaction carried out with proceeds of crime considered a proceeds of crime?
It will be considered as proceeds of crime because, for example, many times the first stage and the second and the third stage of layering and integration, that's where the illicit funds are mixed with a lot of legitimate business, and that business will start generating some profits, which could be again a mix and a combination of your criminal proceedings from the criminal activities and your legitimate business. So in that case, even indirectly it becomes activity that gets covered under PMLA. So yeah.
Perfect. Thank you so much. Next question. Do reporting entity have any civil or criminal liability under PMLA for non-reporting or misreporting?
Rather than criminal liability, I think reporting entity first of all needs to ensure that reporting is done. In case if no reporting is done, there is no such criminal liability, but there will be fines that will be levied against, on such entities. And the moment there is fine specifically from the AML angle, it also damages the reputation of that entity. So that way, reporting entities need to be extremely careful.
Okay.
And in such cases, as I mentioned earlier, even the designated directors might also be liable for the penalties.
Great. Moving on to the next question. In a scheduled offense where there is no POC, can ED still proceed against accused under PMLA?
I think PMLA becomes applicable only in case wherever there are proceeds of crimes. For example, if I have to give you example of suicide attempt, okay, or a case of a suicide. So suicide is considered as a scheduled offense. However, there are no proceeds of crime in such case, right? So it won't come under the purview of PMLA. So only those crimes or only those offenses which are attached to these scheduled offenses which generate some kind of proceedings or criminal proceeds from such crimes will come under the purview of PMLA.
Okay. Next question. Is there any time limit for disposal of appeal by educating authority?
There is no specific timeline provided in the Act. However, I think ED's initial assessment report or order that they call search order, the validity of it is around 180 days. So that's when the adjudicating officers or authorities need to ensure that whatever is the final order from their side, whether they want to reject ED's matter or they want to take it on record, in both the cases, they will have to give any order within the time period of that 180 days period.
Perfect. I'll take last two questions. First is
Sure.
there any minimum monetary limit before initiating action under PMLA? I repeat, is there any minimum monetary limit before initiating action under PMLA?
There is no any minimum amount that has been mentioned or any minimum threshold that only an activity or transaction pertaining to this size will qualify to be to go under PMLA. There is no such minimum limit. It could be any small amount, But generally, small amounts will not. I mean, generally, if you see the nature of the law and the nature of the criminal activities, the amounts generated will always be substantial. However, there is no minimum limit that has been specified in the law.
Okay, perfect. Final question. How is the burden of proof different in criminal law and section 24 of PMLA?
I think I mentioned this earlier during my session that in all other criminal laws, the burden of proof is generally on the adjudicating authority. However, in case of PMLA specifically, the burden of proof is on the head of the accused. So if I have been convicted or if I have been convicted of alleged offense under PMLA, it will be my responsibility and it will be my burden to prove in court of law that my innocence. So the burden of proof will be on the head of the accused in such cases. In PMLA's case, that's what it makes it absolutely dangerous.
Perfect. Thank you so much, Shweta. Seeing the time and other details, I believe we'll wrap up the Q&A flow. I have seen I believe we have seen an overwhelming response. As I said, LinkedIn is also full. We have seen more than 500 participants attending this webinar on LinkedIn, and Zoom is anyways house full. Participants, the recording of this webinar will also be made live on YouTube. So it will take 3 to 4 working days. So you can check that as well. As far as the certificate is concerned, we shall be sharing the same by next week, Tuesday. We shall be sharing it to the registered email ID, the email ID which you have sent while making the registration in Zoom. So don't worry about that. Here I thank Ms. Shweta. Thank you so much. We shall be, I shall be in contact with you for further sessions. And thank you all the participants for joining today's webinar.
Thank you, Arshita. I really tried my best to deliver whatever information that I could in the 1 hour's time. Sorry, I mean,
and I'm not kidding. I have seen the, I'm seeing the replies. I'm seeing the LinkedIn live as well. So it has been a splendid webinar, and since it's a very new concept for many people, including myself, I have understood at least 20-30% of what AML is, because I am a naive. I don't even know 0.1%. So if I understood this much, it means I can say the same for the participant. Thank you so much.